Jesus, it's been absolutely brutal to be a Tesla stock investor for the last year. We're down about 65% from all-time highs, if not more. Every time I buy more Tesla stock, it feels like I'm just throwing more money into the fire. It feels like this collapse is never going to end. And yeah, in today's video, I just kind of want to give an update on Tesla, on my position in Tesla. Do I think it's a good buy at these prices? Is it going to continue going lower? Should you wait and try and buy lower, or should you even sell at these prices? And in my opinion, there's three main reasons why Tesla's stock price has been collapsing. The first of which is this demand problem. Tesla, we're going into a recession next year. During a recession, people tend to spend a bit less money on big ticket items like cars and houses and stocks, obviously. So if we're going into a recession, people are going to buy less cars. There's going to be less vehicles sold, and for the first time in history, Tesla could potentially have lower demand than their production. The other reason Tesla stock has been dropping is this whole Twitter drama, Twitter and Elon Musk buying Twitter, and all this political bullshit that no one really cares about. Obviously some people care way too much about it, but it is negatively impacting Tesla's brand. And Tesla is kind of, was supposed to, originally was branded towards left-leaning people who care about the environment, etc. And Elon Musk is kind of pissing a lot of those further left people off considerably. And finally, the major reason, the most important reason in my opinion, is the economic outlook, of course, and that has really been the main driver to Tesla's stock price declining over the last year, because it was kind of holding up quite well for a while, and now it's really starting to capitulate. And yeah, could we see that final capitulation for Tesla stock? Could it really get to those below 100 kind of levels? Let's discuss that. Also should add that I think another reason Tesla's stock price has been dropping is because it's probably one of the biggest stocks that people buy on margin. It's also one of the biggest stocks that people like to short. So there's insane bulls and bears on either side. People really think Tesla's going to go to the moon, and people really think Tesla's going to zero. There are very strong oppositions on both sides. There's not that many people in the middle, and kind of trying to be in the middle is probably the optimal place to be, in my opinion. Nevertheless, there's a lot of people who bought Tesla on margin when Tesla was 3 times the price, or twice the price. So they could be getting margin called. They could be getting forced to sell their stock. And who potentially might be the biggest worst seller of them all? No other than the main man himself, Elon Musk. He took a lot of margin against his Tesla stock to buy Twitter. So he took tens of billions probably, and used his Tesla stock as collateral to purchase Twitter. So you have to keep your margin in line with the loan that you took. So now Tesla stock has been dropping. He's probably looking like, oh crap, Tesla stock could continue dropping, and then I'll get margin called and I'll have to sell a huge portion of my Tesla stock. I'll start selling my Tesla stock now, which he's been doing for the last good while. But I'll start selling some of my Tesla stock now. He sold some recently, a couple $1 billion worth, to lower my risk. And he's lowering his risk because maybe potentially he thinks Tesla stock could drop even further. Elon Musk, he knows more than anything about Tesla stock, probably. Alright, so let's have a look at the first point, which is the demand issues. So Tesla bears have been saying there's demand issues for so long, and let's have a look at this is a chart. This is a little bit old, but this is the best chart I could find in regards to demand and sales and orders. So the light green dotted line going across there, you can see the hump in it. That's the wait time. So basically the Tesla bears were saying that the wait times for Tesla has dropped significantly, which it has over the last few months, over the last year. Like in 2021, you would have to wait 6 to 9 months for certain models of Teslas in certain areas. But now the wait times have started to drop significantly, and this is, in my opinion, partly due to the increased production that Tesla has managed to create over the last year. Their production numbers have gone through the roof over the last year. So obviously if wait times come down to buy a Tesla, this is really good for customers and really good for consumers, because you don't want to have to wait 6 months to get a car that you bought today. You want to get it the next day ideally, which for some Tesla models, for some vehicles, you can actually expect your delivery of your vehicle in a couple of weeks. So pretty much when it comes to a car that gets driven to your front door, that's a pretty good wait time. It's pretty low wait time. But is that a sign that Tesla's demand is finally, for the first time in their history, lower than the amount of production that they'll make next year? Probably not now, but will their demand be lower than the amount that they produce next year? Alright, in my opinion, I don't think so. But the reason isn't because they'll get enough demand. I think more likely, if they don't get enough demand, if they don't get enough people ordering vehicles, Tesla has huge margins on each of the vehicles that they sell, about 30% or so. So if their demand isn't coming in as hot, like Tesla's vehicles they price them quite highly because they have such long wait times, so they need to increase the prices to try and reduce the wait times. But now that the demand might be slowing a bit, people don't have as much free money, they don't have access to crazy amounts of credit, and you buy a car, you usually buy it on loan, and when interest rates are going up, you're less likely to buy a car then because the interest payments will be higher. But what Tesla can obviously do is just lower the prices to meet the demand. But what does that obviously mean? It means Tesla's earnings are also going to be reduced, and Tesla's earnings being reduced will mean their price to earnings ratio will go up, which means, if everything being equal, if you want the price to earnings to remain constant, the price of Tesla stock also has to come down to meet the new earnings. Now, it's obviously not a fun time to be an investor in pretty much anything. So if we are getting a recession next year, this will be Tesla's first recession as a major car brand. And as I already mentioned, people tend to spend a little bit less money on big ticket items like cars. And if they're going to buy a car, they're probably going to buy a cheap second-hand car rather than a brand new sexy Tesla. But for anyone who does have a bit of extra money to buy a car, who needs a car, they're going to be a lot more careful on what car they buy. They're going to look at it from a purely economical, probably not purely economical, but they're going to pay a lot closer attention to detail in regards to the economics of buying a car. So they could buy a gas-powered vehicle, or they could buy an electric vehicle, and then they'll realize, oh wait, electric cars cost a lot less in maintenance, and they cost a lot less in fuel. Electricity is much cheaper than petrol. So they might be like, okay, maybe an electric vehicle makes the most sense. And then they'll see oh, maybe Tesla is the most efficient, gets the most range per kilowatt hour, and also has really low depreciation and has other advantages that built into the car, like the potential of being a robot taxi, of being a backup generator for your house, etc., etc. So from a purely economic outlook, Tesla Model 3 over a 5-year time horizon is the same price as a 20,000 Toyota Camry that uses petrol. So from an economic outlook, Tesla might make a little bit more sense to people still buying cars. Another chart to show you is that Tesla has been absolutely outperforming all the other major EV manufacturers. None of the other EV competition, except from BYD, are selling EVs profitably, as well as the legacy companies like Ford and GM. None of them are selling EVs profitably. Tesla is the only one. So some of their competition during a recession, they're making losses. Their stock price is down 80%, maybe even 97%. So they can't really raise money. They can't sell more stock to raise money. So they're probably burning through cash at a crazy rate. So a recession could put a lot of these companies out of business, which is unfortunate because you want to see EVs succeed. But yeah, for Tesla, there'll be less competition if we do go through a major recession. Potentially some of these will go bankrupt, and maybe even a legacy company like Ford or GM, but that's probably a while down the road yet. They're still making money off their gas powered vehicles. So Tesla, the business, is still doing great. They're growing their revenues, they're growing their deliveries, they're going to be opening a new factory in Mexico soon. They haven't announced that yet, but we've seen signed papers that they've purchased a bit of land in Mexico. So why else are they doing that? So that will be a bullish catalyst. Other bullish catalysts, the semi-truck, the new product semi-truck, Cybertruck. We won't talk about them today. In regards to the stock price, the valuations, obviously valuations get hit during recession. All valuations of everything comes down. But on a fundamental level, Tesla stock price, as we can see there, its PE, its forward PE is 27. And that's using the earnings calculated by, Wall Street analysts. So you might be like, okay, Wall Street analysts have the earnings too high because Tesla's earnings are going to have to collapse, or not collapse, but reduce next year. But in general, Wall Street's for the last 5 years, or ever since I was in Tesla stock, have always underestimated Tesla's earnings. So Tesla's forward PE could actually be even in the low 20s if Tesla's earnings are higher next year than they are today. But they're trailing price to earnings ratio, so their price to earnings ratio right now. And this, price to earnings ratio is like the fundamental valuation metric of a company. You can also use discounted cash flows, which also look really strong for Tesla. So on a fundamental level, Tesla looks extremely cheaply valued. Even their price to sales ratio is 6. That's really low for a company growing 40 to 50%. And the best way to kind of value a growth stock is the PEG ratio. And we can see their PEG ratio is 1.21. If you don't know what a PEG ratio is, it's essentially a price to earnings ratio with growth factored into it. So you want to see a PEG ratio around 1, and that means a very, not very cheap stock, but a cheap stock if it's around 1. If it's under 1, it's a very cheap stock. But usually they sit around 2 or 3. So on a long-term time horizon, we know Tesla has always hit its really long-term goals. As you can see, their long-term goal back in the day was to make 500,000 cars by 2020, and everyone thought this was absolutely absurd. And yet they hit that goal in 2020, even though 2020 we had a during 2020, they still hit this goal despite that. So their next goal, or their next forecast, is to sell and produce 20 million cars by 2030, which continues their compound annual growth rate at 50%. And that's not every single year. That's an average over a few years. So some years they might only grow 40%. Other years they might grow 60 or 70%. When they open a new factory, they're obviously going to be able to build more cars. But if they only open one factory one year and they open 3 the next year, obviously there's going to be a bit of fluctuations in their growth. It won't be perfectly 50% every year, but that's their aim. That's what they're going for. And they've done their long-term goals before, so maybe they'll do them again. And here's just like Tesla in comparison to the other major massive companies in the S&P 500, the FANG stocks, and they're the only ones who are really growing this quarter. So their last key statistics at the moment, their balance sheet is perfect. They have way more cash than they do liabilities. Only 5 billion or 6 billion in debt, while they have 21 billion in cash sitting on their balance sheet, and they're profitable. So this cash pile is just building up, and they're not really sure what to do with it yet. Build more factories. The other thing we can see is their revenue growth is 55% this year, but look at their earnings growth, 100% year over year. Now they probably won't do 100% earnings growth next year, but we can see they're growing crazy fast. So lastly, what am I doing in regards to Tesla stock? I bought another share today. I'm a big baller, a whole €150. But yeah, I'm buying. I know Tesla stock could continue dropping, but on a fundamental basis, that's all I really care about. It's going to be painful for the next year or two. Tesla stock could get way lower. I don't know. I can't predict the future. Like the markets are irrational in the short term, but in the long term they are rational, and on a rational long-term fundamental basis, Tesla is extremely cheap in my personal opinion. So I've bought more Tesla stock today, but I do think there are probably could be better opportunities in the crypto markets, so I will still be paying attention to the crypto markets. But I'm not recommending anyone buy Tesla stock, because it takes a bit of balls to buy Tesla stock when it just looks like it's down only, and don't expect a clear reversal tomorrow. Like, not at all. You have to be able to deal with a bit of pain. Some people get really affected by their portfolio going down or stock prices going down, but if you can detach yourself from those imaginary numbers, like you're not selling all your portfolio tomorrow, you're not trying to cash it all in the next few weeks, it doesn't matter what the portfolio value is right now. Just over the long term, what is your portfolio value? That's the only thing that really matters. If you're this is a long-term investing channel, not a trading channel or a short-term investing channel. So I'm buying a little bit more Tesla stock. I don't know if it's going to go up or down in the short term, but at these kind of valuations, it's starting to look extremely attractive. But of course, we could always get a further capitulation event and Tesla stock just nosedives to who knows what price, and the main reasons that would be like some sort of demand problem, which would collapse their earnings, which would also collapse the stock price. But that's a risk I'm more than willing to take because I believe in the long-term vision of Tesla. So I hope you enjoyed this video. If you did, if you wouldn't mind smashing the thumbs up, hitting the subscribe button and the notification bell. Well, if you actually want to see my videos, hit the notification bell, because I'm such a small channel, I won't be recommended in your feed most likely. So hit the notification bell if you actually want to see all my videos. Thank you so much for watching. See you in the next one.